good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we are now at the 25th of July, 2023, just after 5:40 p.m. Central Time. So you know what the market's doing. The market's now into the mode of it's looking at several things. First is going to be, what's report day tomorrow? FOMC meeting, the Fed policy meeting. The market widely expects 25 basis point hike. I expect that in the press conference, the Fed chair will have to dodge this. He should not give anybody the idea that the Fed is done. He should not let them say one and done. He should say, we're doing one. We have to see how inflation comes. We'll be very data dependent. If it requires more, there's going to be more. That opens the door that if it's not required, he doesn't have to do it. And he's also said if the data requires and he loses, no credibility. That's what I expect he's going to do. I was watching the other day Steve Leeson on CNBC, and he was showing real interest rates, real inflation. And the simple fact is, to get to the Fed goal, as Steve said, you've got to go probably another 3-4 hikes to get there based on how inflation is falling right now. That doesn't mean that can't accelerate down. It also doesn't mean it can't get sticky, and you've got to go for those more hikes. Everything's going to be data dependent, in my opinion. Now, the stock market has been a run to the upside. The term melt up has been appropriate in this market because it paid no attention to any bear news. Bear news became good news. It meant bear news, oh, the Fed's done, it doesn't have to go any further. That's how the market interpreted it. Did you get high enough to stop the rally now is going to be the question. The fact that you have from JP, I think it was JP Morgan, Mike Wilson, is it, that was with them? I might be in the wrong part, threw in a towel. And I'm watching a few others. I was watching the head of one of the major brokerage firms come out, and he is still a big bear. And I'm talking one of the big discounters coming out and why he's bearish and all. Okay. I get what people say. Nobody believes, and this is what you have to understand, that there can be a soft landing. Nobody believes the Fed can engineer that. They believe that inflation will be sticky, which so far it is. You can't deny that the Fed will have to go further to get it down to its goal because that is one of its mandates. And in the end, they'll do damage to the economy. We'll see who's right, which side of that equation. Let me tell you what the market has said because it's right in front of us. The old high, the correction, and you're coming right back up into that yard. It'll take nothing to go through that high. The Dow Theory, I write about Dow Theory tonight. I don't know how many of you know what Dow Theory is. And I go back all the way to the 1900 when it was written, and I explain it in tonight's full research. And our offerings tonight will bring up all the different products we have that are free to you. One of them is you can sign up for my newsletter and get it free for a short while if you haven't tried it before. But as you can see how the market's coming up here, well, you're in that zone. Is this going to be the go-through, or is this going to be where the market comes up and sells off on a big double test, and then the other people, if the market were to start down in any meaningful way, say, I told you so? Which moment are you going to get? When I go to the daily charts, it's still relentless to the upside. What you don't want to see is the market taking out this range right here, the 45, 59, 75. Taking that out at a minimum means you're going into a distribution top. Not super bearish, but that means you're going to consolidate this gain for a while. Haven't done that in a while, so keep that in the back of your mind. At least that's my guess as to what it would be. How far might it drop if that occurred? And that's the word if, back down to 45.27. What, though, if the market decides to go to the upside? Because I want to be fair, bullish and bearish. Well, then I look at the Bollinger Band, and the next stop would be the 46.38 level, right in that general zone. And there you are. And that's how I'm coming to that part. We have the most bullish of situations. As long as the embedded reading is embedded, it's the most bullish technical tool I know. I teach it in my course. Go to our website if you haven't taken it. Enhanced Bollinger Bands, learn how to work with it. I use it in stocks. I use it in anything I can chart. If it's got volume and all the components that you can use to create the formula, I'm in love with it. When I take a look at the NASDAQ, this has been the sell-off market. You had the embedded reading, you lost it, and you made your run to the 18-day average. You've done your work here. This market is now going into the report, more bullish than bearish, actually. Well, I've got the zero pointing down. I'm actually going to remove that tomorrow. With the action that you've had over the past 48 hours, I can now say you have higher lows and a higher high, and that arrow goes away. When I look at the Dow, this has been relentless. If you look at the cash Dow, I think today was the 12th day in a row it was up. So that's rather impressive in itself. That's 2.5 weeks nearly of every day up. It's embedded. Nothing's more bullish. Lose these readings, get a 79 reading, and then I think you make a run back to the 18-day average. Until it occurs, no. Until it occurs, you get breaks in the market, and I think the pros will be there to gobble them up until that 79 reading at the end of the day shows up. Is there risk to it? Of course. But that's what I think they're going to do, and I think they'll do it over and over until this game comes to that type of end temporarily. In the Russell, you keep trying to get under the 80 level and can't do it, and the pros buy these breaks. That's what they're doing. Get a reading under 79, and I think people will cash in. And when that occurs, I look for sell-offs in any of the indices that happens back to the 18-day average. But until it happens, I expect the pros to be buying. In the bond market, the trend is down. The market is saying, okay, let's take a look. Now, the naysayers got to be saying, why is that going on? Because you're adding yield at this point. I understand that. But the bears have control of the market for the moment. If you take out the highs of 2 days ago now, that would be where the game changes. So you get over 127 in 230 seconds. I don't think you want to hang around the short side anymore. That negates this attempt at a break. In the 5-year note, it's bearish. Lower highs, lower lows, you're under the 18-day average. If anything, the pros are going to sell short here at the 18-day average with stops over that 107.14 area, trying to get back into this 106 zone. When I look at the dollar index, neutral now. I finally got to the point where the first challenge of the 18-day average of closes, when you lost the embedded reading right here, it's hit its goal, which means the euro probably hit its goal. And today, market, I'm smiling because I love when this happens. You lost the embedded reading right down to it, and boom, this is where the market's now hit its goal. That doesn't mean it's not bearish. It's still very much in the bear camp. And remember, this market is looking at Thursday. Miss Lagarde will be on. So we'll probably get around 7 in the morning or so, the announcement. I'll look up the exact time. And then she'll have her press conference. She's a big hawk. I don't expect anything to change. I expect the rate hike. In the British pound, here too, you had an embedded reading. You lost it. You went right back to the 18-day average. And the market is sitting there saying, okay, I think it's next week we get the Bank of England. Then we get to Bitcoin. Now, this is July. I want to switch to the August, and we'll do that right away. But lower highs, lower lows, still bearish. How deep it wants to go? I doubt it's going to go on this run much more than between the lower Bollinger Band and the 100-day average, because there's support points on the chart. It has nothing to do with fundamentals. Then you've got SEP Brent versus SEP WTI. I'm going to change this now. So we're going to have to move to the October's contracts. But as you can see, they've narrowed in at this $4 mark for whatever reason. Here is the October Brent crude. And you've got the higher lows, higher highs. But you've hit my upside targets. But now something else is brewing. Let me show it to you. We'll go to Tuesday's close. Both numbers are over 80. On Monday, both over 80. And the day before. So you're embedded. If you're embedded, it means to me, just what we talked, even though you get to the Bollinger Band, I don't think the pros are taking off their whole positions, and I think they'll buy the market on breaks. I pointed out to you, as I'm back here this week, watch out. You're getting close to where you're going to get a bullish crossover with the 18 getting over the 200-day average of closes, the gray line. So I'm watching that. You're embedded in the WTI. First objective just hit. On breaks, the pros will, I still think, buy and look it out. You're about to just get to your bullish crossover. Could happen before the end of this week. Gasoline, still bullish. Now it's nosediving right here. I didn't see the API numbers, but at 9:30 in the morning, we will get the EIA numbers. That's what I like to trade off of. The API, it's really not the real important number. It's the EIA. That's what the whole market gears on. If you lose the embedded reading, you open the door for price and the 18-day average to make a run at themselves. Natural gas, remember we were down here, I said, I don't think it can be bearish anymore. Well, up here, what you've got is the market taking a look at all the hot weather moving through the Midwest now, maybe parts of the Great Plains. I was in Montana, it was pushing there. I know today it was in the high 90s where we were, and Phoenix, of course, burning up. Well, you don't want to be bearish in all that right now. This is the heart of the heat. When we see that there's respite coming, then we take a look. What's the market doing? It's fighting a battle against the upper Bollinger Band. But remember what I just said. I want you to take advantage of everything that we offer. And if you take a look at this page, it's offering upon offering that you can take. And if you scroll down on the page, and it's real easy to do that, you will see that there's more offerings all through this. You pick what you want. As you give them a click, when you're through with it, what will happen is the market will then ask you, there'll be a form that pops up and we'll say, hey, we need your name, we need your email address. And with that, we send you out via email everything that you've signed up for. It's that simple. So it goes on through, and these are things that I helped put together over many years of being a broker in this industry, both stocks, futures, been around it a long time. And I think you'll find this is some of the best stuff out there. Once again, it's free and a whole array of products. You can click up at the very top of the page. That will also take you to the free offers on our website right into this area. You have a good day. I'm Ira Epstein, and I'll see you tomorrow.